Hey family, we have been seeing multiple articles lately regarding Social Security benefits being taxed, and some are shocked to learn about this information and don't even know how to explain it. Well, it appears that recipients in specific states are being taxed up to 85% of their Social Security benefits. But in this particular video, I am going to be showing with you how you can avoid paying these taxes on your monthly checks. I've got the details to share with you in just a moment. But before we get started, you already know what to do. Make sure that you'll subscribe to the channel as well as hit the like button for the YouTube algorithm. Now let's go ahead and start with the video. Starting off, guys, did you know that your Social Security benefits are taxable? Well, a lot of people did not even know this information, especially depending on what state you actually live in. But the truth of the matter is your Social Security income is generally taxable at the federal level. Though whether or not you have to pay taxes on your Social Security benefits, it depends on your income level. If you have other sources of retirement income, such as a 401k or maybe a part-time job, then you should expect to pay some income taxes on your Social Security benefits. If you rely exclusively on your Social Security checks, though, you probably won't pay taxes on your benefits. But regardless, it can be helpful to work with a financial advisor who can help you understand how different sources of retirement income can actually be taxed for you and or your spouse. But anyways, your Social Security benefits could be taxable depending on your situation. According to the IRS, the best way to see if you owe taxes on your Social Security income is to take 1.5 of your Social Security benefits and add that amount to all of your other income. This includes tax-exempt interest. This number is known as your combined income, and this is how it's actually calculated. Which this particular math equation right here, which says that your combined income equals your adjusted gross income, or AGI, plus non-taxable interest plus half of your Social Security benefits. So yes, guys, that particular calculation can help you figure out whether or not you will be owing taxes on your Social Security income. But anyways, guys, the biggest question is, do you have to pay this taxes, and is there a way that I can get around it? Well, shockingly enough, guys, we are going to be talking about that in just a moment. But in addition to that, like I just told you, that some of the inflation adjustments recently won't even save you from paying taxes on 85% of your Social Security benefit. And experts say that there are some ways to reduce your taxable income with careful planning of charitable donations and Roth conversions. Yes, guys, but let's go ahead and break it down to you real quick. I have this article right here that talks about how you can pay 0 taxes on your Social Security benefits. And here are 5 easy strategies to reduce or even eliminate what you give to Uncle Sam. This is great news as the new year is almost upon us. So this is a great time to take action, figure out what you need to do so that you don't have to pay any taxes on your Social Security income. Let's go ahead and jump into the 5 specific ways on how you can avoid paying taxes. Is this even legal? Yes, it is, guys. But anyways, this is going to be a little bit confusing, I must say. So just a heads up, I will include a link to this particular article down below in the description so that you can check it out in its entirety. Also, like it says previously, to go ahead and discuss your different options with maybe a financial advisor or someone else that you trust, you know, other than someone on YouTube, right? But anyways, guys, the first thing that's on this list is you need to make tax deductible contributions to your IRA. It says that you may be able to reduce your adjusted gross income by contributing to an individual retirement account, or better known as an IRA, depending on your income, your tax filing status, and whether or not you participate in an employer-sponsored plan such as a 401k. Your contributions to an IRA may be partially or fully tax deductible. That means you can claim them back, if you will. And it was announced on November the 1st that the 2024 IRA contribution limit had actually gone up to $7,000. So that is giving you additional, a little bit more money that you can actually claim as far as a contribution, so that you can get that tax write-off, if you will. The previous limit was $6,500. And if you're over 50 years old, you can contribute an extra $1,000. So that would be $7,000 plus $1,000 to catch up, so that your actual limit may be $8,000 in 2024. So again, that is the first way that you can do this. The second way that we have on the list is you can take withdrawals from your Roth IRA and your Roth 401k first instead of the benefits. But anyways, it says that since contributions to your Roth IRAs and Roth 401ks aren't tax deductible, withdrawals from those accounts are tax free if you're over the age of 59 and a half years old and the account has been open for at least 5 years. Though the withdrawals don't count towards your adjusted gross income. One tax reduction strategy is to withdraw from these particular accounts before withdrawing from your traditional retirement accounts, for which the distribution are taxable. You can avoid taxes on your retirement income for as long as you're able to live off of a combination of your Social Security benefits and any type of other income that you might have, such as coming from a Roth IRA or a Roth 401k plan. So anyways, guys, that is another way. The third way that we have on the list is you can use taxable income and then delay claiming your Social Security. It says that one way to guarantee that no tax will be applied to your Social Security benefits, at least for a period of time, is to not even collect them. Instead, consider funding your early retirement years through an IRA or a 401k using the withdrawals. Even though those funds will be subject to income tax, the strategy could increase your future Social Security benefits and potentially decrease your future adjusted gross income. Now, you're eligible to claim Social Security benefits once you've reached the age of 62 years old. We all know that, but it does pay to delay it since your benefits will be about 30% greater by you pushing away your age in regards to your retirement. A lot of people typically wait to about 65 years old, and then you can get the most value by waiting to, I believe, 70 years old. But anyways, in addition to that, if you withdraw from your non-Roth retirement accounts, you reduce the balance in these particular accounts, which in turn will reduce the required minimum distributions, or also known as the RMDs, which are the amounts you'll be required to withdraw as of legally specified age, either 72 or 73 years old, depending on your birthday as well as your birth year. Lower RMDs could result in adjusted gross incomes falling below the threshold that trigger taxes on your Social Security. I told you guys this was going to be a little bit confusing, so go back and read this article definitely so that you understand it to yourself, and then go discuss it with someone, like I said, someone that you actually trust that may know a little bit more about how taxes work. But anyways, moving on, the fourth way to avoid paying taxes on your Social Security benefits is you need to maximize your tax efficiencies. Check in with your financial advisor to ensure that your retirement investments are being managed as tax efficiently as possible. One way to do this is through tax loss harvesting, whereas selling stocks at a loss offsets capital gains earned elsewhere, reducing taxable income and your adjusted gross income. So the last thing that we have on the list is that you could always donate your RMDs to charity. If you don't need the income from your RMDs, you can avoid having them count as part of your AGI by donating them to charity. Paying taxes on your Social Security benefit can come as an unpleasant surprise, especially when you're trying to prolong your income in retirement. Talk to your financial advisor about which strategies could help to reduce that tax burden, as well as how to maximize your Social Security benefits. So anyways, guys, that that is what they're talking about right there. Like I said, a little bit confusing, if you will, but some people understand this particular lingo. But like I said, reach out to someone else, get a little bit of assistance. And also, I will include this link to the article down below in the description so that you can read it over and be more efficient in regards to the lingo in this article, and then discuss it with someone else. But anyways, last but not least, I do want to tell you another way, which is probably maybe a little bit easier, if you will, but this particular way is going to help you avoid paying your taxes on your benefits. And yes, guys, that is because, did you know that 38 states don't even tax Social Security benefits? So yeah, why don't you just go ahead and pack up and move to one of these particular states? Yeah, let me just take a little bit step back, guys. We know that is almost impossible to actually do. But anyways, I do want to go ahead and share with you these specific 38 states that don't even tax your Social Security benefits. But anyways, like I said, you can avoid taxes in retirement by moving to one of these particular states, but there is an even better ways to actually do this, which we just talked about, those 5 other ways in regards to either lowering your tax bill or eliminating it altogether. But anyways, like I said, there are 38 states that do not tax your Social Security benefits. But anyways, real quick, the following table details the portion of your Social Security income the federal government will tax you on. As you can see right here, 0% in regards to taxable portion of your Social Security if you are a single filer making less than $25,000 per year, or if you are joint or married, less than $32,000 per year. And then all the way up to 85% taxable portion of your Social Security income if you make more, if you're single and you make more than $34,000 per year, or if you're married and y'all both collectively make more than $44,000 per year. So anyways, guys, those are the specific portions in which you will be taxed on Social Security benefits. But like I said, we do have 38 states that don't tax Social Security benefits, and 12 states tax Social Security in some cases, which each state having different rules for how those taxes are calculated. But the 38 states, including DC, the District of Columbia, won't even tax you guys. But anyways, let's just go ahead and talk about the list right here. Here are 38 states that don't tax Social Security benefits. Now, I'm not going to read all of them, but I'll just scroll through real quick so on the screen so you can see them right here on one of these sides. But anyways, guys, we have anywhere between Alabama, Alaska, Arizona, Arkansas, Hawaii, Idaho, Indiana, Kentucky, Louisiana, Mississippi, Nevada, New York, North Dakota, Ohio, Oklahoma, South Dakota, Texas, Virginia, Washington, Wyoming, and all of the other ones that we just scrolled through right there, guys. So if you didn't catch your particular state, you can always rewind this video. But anyways, those are the 38 states that don't even tax you on your taxable Social Security benefits. So anyways, guys, if you have the option to move to one of those states, then obviously that would be a huge game changer in regards to your benefits, allowing you to keep more money in your pocket. But anyways, guys, that is all we have for you today in regards to avoiding paying taxes on your Social Security benefits or your Social Security income. I hope all this information in this video was helpful to you today. Well, anyways, guys, that's all we have for you today, but feel free to check out some of the items down below in the description. There are a couple of opportunities for you to earn some free money or some free cash, such as signing up for the Amazon Prime membership, which is a good time because you can get 30 days for free. And yes, we all know that Black Friday is around the corner, so what a perfect time to get it. And then also don't forget about, we are pretty much entering into the Christmas season, which means a lot of shopping is going to be going on. So anyways, guys, you can definitely benefit from that free Prime membership to get all your things finished up before the Christmas season gets here. So anyways, check out the links down below. Anyways, if you enjoyed today's content and you want to see more, please go ahead, subscribe to the channel. It's totally free. And if you like today's video, then go ahead and hit the like button for us. It really helps out this channel, as well as it tells YouTube to share this video with others. But anyways, I appreciate you guys stopping by and watching, and I hope to see you on the next video. Peace.